Over the past 6 months, my hedge fund portfolio outperformed the S&P 500 by 22%. And in this video, I'm going to tell you about the single most impactful change we made to get there. Now, for those of you who do not know who I am, my name is Stephen Brooks. I'm a hedge fund manager who specializes in systematic options, specifically on the S&P 500 index. Now, the way that we make money is by selling options. Specifically, we are on the other side of the trade from people who are paying a premium to protect themselves from market moves that most of the time never actually happen. That premium is called the Variance risk premium, and it is one of the most reliable embedded edges in financial markets. It has been there since day one. Now, the thing you need to understand about this game, or the game that we play, is that it's not an ultra high margin business. Many of the strategies we run carry an expected value of about $20 per trade per contract. Now, of course, when you do that 10 times a day across a lot of contracts, it does compound pretty quickly. But our game is edge times volume. And when your game is edge times volume, collecting the greatest percentage of that expected value is not a nice to have. It's everything. When I was running the exact same strategies that we currently run in the fund today, our live results were way below what the model projected. If a strategy had an expected value of $20 per trade per contract, and I went back through the month after results or a quarter after results, I was getting something like $10 per trade per contract, or about 50% less than what I should have been making according to the numbers. And naturally, I started changing things. I adjusted the stop loss, I changed the entries, I changed the triggers, I ran more back tests, I ran more statistical analysis, I even hired quants, and the reality was none of that was the actual problem. It was me. Because when manual intervention is involved, you are going to collect a much lower percentage of the expected value than you probably think. You may not be at your desk at the right time every single day. You may miss a sequence of trades because something came up. You get sidetracked because of a phone call. You're going to be looking at something else throughout the day. On a two-sided trade, for example, you get one leg on, and then 2 minutes later, you have to put the other side of the trade on, right? Sometimes you do the wrong trade. Sometimes you just kind of like talk yourself out of it entirely. Every single one of those things has a cost. And when you're not operating in an ultra high margin environment, when you're making up for that with a lot of volume, a lot of number of occurrences, those costs are actually not small at all. And they add up really quickly. We made one change. We went from human intervention to fully automated execution. That's it. And we went from collecting about 50% of the expected value to about 90% of the expected value. Same strategies, same edges, same everything. The only variable that changed was removing the human from the execution loop. Now look, if you're like a buy and hold investor, that's not something you need to really concern yourself with. If you have a couple basis points of deviation on your entry price over 20, 30, 40 years, it's not going to matter at all. So this is specifically for those that are looking to have their capital act like an asset that pays them with relative frequency. So if that's you, you need to automate this, period. End of discussion. Because the difference between collecting 50% of the expected value and collecting 90% of the expected value is the difference, and in some cases between making money and losing money. So if this video resonated with you, and you're someone who invests for cash flow as opposed to appreciating over multiple decades, we have two choices for you. First, if you are an accredited investor and you want to invest in our fund that does this already, there will be a link below this video where you can go ahead and click on it and explore more. Or if you're not yet accredited and you want to use our automation tools to automatically place trades on your behalf in your account, there will also be a link below this video for you as well.